So first of all, let me explain you this little chart. But a digitized payment means that you get a plastic card from your bank, and you turn this plastic card into a digitized card number, right? As you will see, we are not talking about simply recording the card number that appears on the card onto a device, but we want to do something a little bit more sophisticated. So it's about, first of all, provisioning the card number onto a device. This device could be, again, the smartphone you use for proximity payments or for in-app payments. The device could also be your browser on your PC or your Mac. It could, in the future, also be, these fitness armbands. It could be a lot of things, right? So what is the first principle to us is that when provisioning a card onto a digital device, there should be a strong issuer-based authentication. Okay, so the issuer who actually issues the card and holds the bank account behind the card or the credit card account should authenticate the user when the card is provisioned into a digital device. Second principle is that according to us, the cards should not be simply copied onto the device. So it should not be the actual card number that you have on your main banking card that is stored on the device. It should be what we call a token. And by token, we mean it in the EMV definition. So it's a secure token that is calculated. And what is very important to us is that this token is actually connected to the device itself. So let me explain you what this means. So Apple Pay in the UK that has been launched, right? The banks, if one of the consumers applies for the Apple Pay service, the bank issuing the card would actually authenticate this user to enable this card to be recorded onto the Apple device. And the card that is actually recorded onto the Apple device, it will be actually a number that is specific to this device ID. So if the consumer in the UK loses or is, if the iPhone is stolen, right? So of course this card could uniquely be blocked, and the original card number, the main plastic card that is used by the consumer, does not have to be reissued and so on, because the card itself is not compromised. It is only the specific card number connected to this iPhone that will be blocked, right? Second benefit, if this card number would be compromised on the iPhone, it could not be used anywhere else. So it's useless. Why? Because when the transaction is authorized, we check that the token that goes through our network comes from this actual device, right? If it's not the case, the transaction would be declined. So this is a very secure system. And when we see the first reactions, when we talk about contactless payments with mobile phones, the first reaction is always, wow, data could be captured and so on. This is very risky. Actually, it is not. I mean, there are a number of things in the background that make it very secure. The challenge is, as always in our business, also to educate the market and explain why these things are secure. But usually, it's a question of time. But so, tokenization is something very important and critical, in particular, going forward when people will use multiple devices to make payments, right? So we don't want a single card number to be stored on multiple devices. We want each time a different token connected to the device to be stored on it. Okay, please let me know if it is unclear. Okay, the third principle is that when you actually use the device to make a payment, the main principle should be strong authentication. So I pay, let's keep the same example, right? I pay with my iPhone with Apple Pay. I have my bank card stored into the Apple Pay wallet. When I pay with Apple Pay, actually I have to put my finger on the fingerprint sensor of the Apple device to authenticate myself. So I have a device, I have the fingerprint sensor biometrics that are used, and this is how the payment can be made. Okay? Now, here as well, this is, by the way, compliant with the EBA guidelines for strong authentication, for those of you who are familiar with this. And this is also compliant with the principles of the PSD2. But what we believe is also important is to bring in a concept of risk-based authentication as well. Because in some cases, it does not really make sense to add this extra layer of security, take off very low value payments, for example. Why should we impose, if you pay with a phone instead of a plastic card, why should we impose that with the phone, each time you must enter a PIN code or you must apply biometrics, while when you use your bank card, below a certain threshold, you don't need to enter a PIN. So again, that's where the balance must be right between convenience and security. Okay, but as a principle, strong authentication should always be supported. But does it have to be applied in all cases? We believe not. But it's of course important to define what is the threshold above which strong authentication should always be applied. And the last principle we have in mind in this space is again quite similar to what we have in the chip and pin card world, right? In the physical space, when you pay with a chip and pin card, we can now say that we have almost cut all the fraud out of the system, with a few exceptions, a little bit of lost and stolen fraud and so on. You cannot avoid all fraud, right? But we have basically cut almost all the fraud out of the system thanks to this EMV migration, chip and pin, to the extent that the US are finally migrating as well after having had a few very large fraud cases, right? So this is becoming now a ubiquitous technology that is applied. And we want actually, when we use a digital device instead of a card, we want the same principles to apply. And that means that in the background, there is an actual digital signature of the transaction. Okay? So we take a number of elements of the transaction and we use that to calculate a digital signature to make sure that this transaction has not been compromised. Okay? So it's basically applying the principles of chip and pin EMV in the physical space into the remote space. This has a number of operational impacts, and so it's easier said than done. But we have developed a protocol that enables the banks to put this in place, the banks and other partners, of course. And this is already applied in Apple Pay as well for the in-app transactions. Okay, so the last point is important. It's almost an EMV migration, but for digital and remote payments that we want to apply. Okay, if we combine these four principles, to be honest, it becomes very, very hard to have any fraud. So, and hopefully your task will be easier, then you will have less issues to deal with. So, again, these are the key things and the key points I wanted to share with you without getting too technical. It's not the most exciting part, of course, of payments and purchases, but as we said earlier, we really see security as absolutely critical. And in this new world, with new payment systems popping up here and there and so on, we believe indeed that any payment system that would not bring the right level of security would not survive. And we believe that we have a history, of course, as MasterCard, as a payment organization, of developing standards to achieve a very high level of security. And standardization, that was also mentioned earlier, is also absolutely critical in our eyes to gain scale, because there will be, for sure, a lot of little initiatives. The question is, what are the systems that will really gain scale? And having standard specifications is critical. We also believe that having a strong brand, which is associated to trust by the consumers, is also something absolutely important, right? So, in conclusion, as a payment organization, we want to do what we have done in the physical space and reproduce that in the digital space, and we have already taken a number of steps in that direction. Thank you very much.